Hey, future CPAs, welcome. If you're ready to absolutely dominate one of the trickiest topics in advanced accounting, then you are in the perfect spot. Today, we are cracking the code on home office and branch reconciliation. Let's do this.
You know that feeling, right? That little jolt of panic when you're looking at your trial balance and the two accounts that are supposed to be perfect mirrors of each other just aren't. It's that classic accounting headache. But trust me, we are about to turn all that confusion into total confidence.
So here's our game plan. We're going to start with the problem itself, the nightmare. Then we'll cover the one golden rule that solves everything. After that, we'll debug the most common errors, walk through a full case study, and cap it all off with an awesome brain hack for your exam review.
Okay, let's dive right in. Section 1, the reconciliation nightmare. I know, it feels like total chaos right now, but I promise we're about to make it all make sense.
When you're staring down one of these problems, maybe in an exam with the clock ticking, the pressure is so real. But I want you to change how you think about it. This isn't a sign that you've messed up. No way. It's a puzzle, and every single puzzle has a solution. We just need to find the right pieces.
And that brings us to the key that unlocks the whole thing, the golden rule of reciprocity. Seriously, if you can get this one idea locked in, you have already won half the battle. This is the foundation for everything else.
So, what exactly are reciprocal accounts? Well, think of it like this. They're two accounts that are supposed to be perfect, identical reflections of each other. They just live on two different sets of books. Your investment in branch account on the home office's books and the home office current on the branch's books. They should always have the same number, just on opposite sides. One's a debit, the other's a credit.
This slide shows that mirror perfectly. Look at the left side, the home office books. You've got investment in branch. It has a normal debit balance because from the home office's perspective, it's an asset. It's their claim on the branch. Now flip over to the right side, the branch's books. You see home office current. It has a normal credit balance, representing the branch's accountability, or its equity, that belongs to the home office. One is a claim, the other is an accountability, a perfect mirror image.
All right, now for the part you've been waiting for, debugging your books. This is where we go into detective mode. We're going to find the common little glitches that throw these accounts off balance and learn how to fix them, and fix them fast.
So, our first glitch is one I like to call the invisible asset. This happens all the time. The home office sends something over to the branch, they record it, but the branch hasn't booked the entry yet. So the asset is physically there, but on the branch's books, it's completely invisible.
And here's a textbook example. The home office ships out 50,000 pesos worth of equipment. On their end, they've correctly updated their books. But on the branch's side, crickets. Nothing. They haven't made the journal entry yet, and that's what creates our discrepancy.
So how do we fix it? It's this simple three-step process. First, you spot that something's missing on the branch's side. Second, you confirm, yep, the equipment is actually there. And third, you just journalize it. You debit equipment for $50K to get it on the books, and you credit home office current for $50K to show that the branch is now accountable for it. Boom! Balance restored.
Okay, next up is a glitch that can get anybody, even the most detail-oriented people. It's the typo trap. It could be a misplaced decimal, a missing zero. One tiny little clerical error can throw your numbers way off. Check this one out. An equipment that cost 3,500 pesos was recorded by the branch as only 350. One single zero is missing. But that tiny mistake creates a massive 3,150 peso hole in your reconciliation. It's crazy how that works. So fixing it is super straightforward. First, just do the math. 3,500 minus 350 gives you an understatement of 3,150. Since the branch recorded too little for the asset, we have to increase it. The correcting entry? Just debit equipment for that difference, 3,150, and pop a corresponding credit into home office current. Easy as that.
And our final common glitch is the unrecorded memo. Okay, so this sounds official, but it's really just the home office sending an internal note, a debit or a credit memo about a transaction, and for whatever reason, the branch just hasn't recorded it yet.
So in this case, we have a credit memo for an 800 peso discount. The easiest way to think about this is the home office is basically telling the branch, hey, good news, you owe us 800 pesos less than you thought. The home office already recorded this, but the branch hasn't, so its home office current account is too high. To fix it, the branch needs to reduce that account. And since it has a normal credit balance, you reduce it with a debit. Simple.
All right, you've learned the glitches, you've learned the fixes, now it's time to put it all together. Think of this as the final boss battle, where we take everything we've just covered and apply it to a full reconciliation problem.
Let's walk through this together. As you can see, the unadjusted balances are way off. Our job is to find out why. Okay, first up, merchandise in transit. That's a classic. The home office sent it, but the branch doesn't have it yet. So we add it to the branch's books. That's the plus 5,800. Next, the branch collected one of the home office's accounts receivable, but didn't tell them. The home office needs to know they have less of a claim now, so that's a minus 560 on their side. Then you see supplies were returned and a couple of errors. Each one is just a little adjustment on one side or the other. You follow the logic for each transaction, and by the end, oops, looks like these numbers don't quite match. Now this is a great teaching moment. The note on the slide explains that for clarity, not every item is listed, but the method is what's important. In a real problem, you'd keep going until they match perfectly. The key is applying the logic step by step.
And now, the moment you've all been waiting for. This is your LECPA brain hack. For everyone watching, LECPA is the big licensure exam for CPAs here in the Philippines. This next slide is your ultimate cheat sheet, designed to make these rules stick in your brain, for review and most importantly, for exam day.
You are going to want to screenshot this, write it down, whatever you need to do to burn this into your memory. But don't just memorize it, understand it. If you see a shipment in transit, what does that mean? The branch's books are understated, so you add to the branch books. If the branch collects money for the home office, the branch now owes the home office more, so you increase the branch's HO current account. If the home office collects money for the branch, then the home office's net investment is lower, so you decrease the investment account. Every single one of these rules has a simple why behind it. Once you get that logic, you'll be able to solve these problems with speed and, most importantly, accuracy.
And that is it. That is how you take a reconciliation nightmare and turn it into a problem you can solve with total confidence. We've gone through the logic, the common glitches, and the quick-fire rules. So let me ask you, which one of these errors do you now feel like you will never, ever get wrong again? You've got this.